Are mortgage companies better than banks? Let's talk about this. So, a lot of times, first of all, I feel like there's a huge misunderstanding about what the difference is between a mortgage company and a bank and a mortgage broker and a correspondent lender. And we could go down a whole rabbit trail of all the different types of companies there are and how they exist and whatever. But just to make this really simple, let's talk about the differences between mortgage companies and banks. And for the purposes of this video, mortgage companies is going to encompass mortgage brokers, direct lenders, correspondent lenders, like basically everybody in that little kind of bucket, if you will. So basically, companies where their one and only function really is mortgage. That is our one and only function. Okay. And then conversely, banks, which is going to be banking as their primary function. And that's going to be, entities, banks that also do mortgages as well. Okay. And so this is a great debate. And the truth is for just as anything is it depends. It kind of depends on what you're looking for. The one negative in my mind of why you definitely would want to look at a mortgage company versus a bank is this. Understand that banking is a bank's primary job function and a mortgage company's primary job function is mortgage. That is their bread and butter or whatever. And so with that being the case, the mortgage company is oftentimes going to hold better rules and standards and give more flexibility and options than a bank is. Because a bank, they don't care as much about doing the mortgage. The mortgage for them is usually what in industry we like to call a sticky product. And so now you're saying to yourself, what the crap does that mean? Sticky product. So sticky product means that because it is this large debt, the largest financial transaction you're ever going to make, if they do it, they do that mortgage loan for you, and then now you're paying them every month to that company, you're more likely to not only stick with them, okay, so keep your money there, number one, but number two, you're more than likely to even bring more products over to them, right? Maybe you have some investments and the bank has an investment arm. Maybe you want to take out a credit card and you'll probably consider them because you already have accounts with them. Maybe you want to take out a personal loan or car loan. You would consider them, right? And these are things that allow the bank to make more money on the backs of you. And so hence sticky product. And so most banks, the whole reason that they do mortgage loans is to create sticky products, to allow them to be able to sell more to you and keep more of that money flowing in-house. That is their main aim. Whereas a mortgage company, what their goal is to help you secure a loan. Why? Because if they can't help you secure a loan, then they are going to have to close their doors, right? If they're not doing mortgages every single month, if they're not actively, doing loans, then guess what's going to happen? Their doors are going to close. Whereas a bank, if they do loans, great. And it hopefully is a sticky product and it helps more stuff flow in the door. But if they don't do loans, also great. And so sometimes that has its own pros and cons. So the pro is that if the bank really, really badly wants mortgages in that moment of time, they technically don't really have to make money on them. And they can sometimes, if they want a very specific clientele, like this really little tiny niche person, they can really make no money on the mortgage because they're still going to make money on this other thing that there is like their secret reason for wanting this clientele. And so it'll all work out in the wash for them, right? Whereas a mortgage company, that's not the case. They have to make money on the mortgage because if they don't, again, doors are closing, okay? So this is, again, some of like the pros and cons of like mortgage company versus a bank, etc.
Stay tuned. We'll be back right after this message from our sponsors.
Imagine having the power to control your financial destiny, no matter where you start. Welcome to the Financial Mastery Simplified course and resource platform, where financial education is tailored to your unique journey. We cover everything you need, from basic budgeting and saving strategies to advanced investing and retirement planning. Learn at your own pace with lessons that match your level of experience. Whether you're a beginner or looking to enhance your financial knowledge, join our community of learners and benefit from shared insights and expert guidance. The Financial Mastery Simplified course and resource platform equips you with the skills and confidence to take charge of your financial future. Ready to master your finances? Enroll in our courses today at the Financial Mastery Simplified course and resource platform. Start your path to financial independence now.
Visit us at fms.tips and fms.college for more information.
Hello and welcome to PBJ Mortgage, where your home ownership dreams become reality. Today, we want to share why choosing PBJ Mortgage is the right choice for your home financing needs. At PBJ Mortgage, we're built on a foundation of values that drive us every day. Our commitment to educate, empathize, and empower our clients sets us apart in the mortgage industry. Our clients are at the heart of everything we do, and their success stories speak volumes. With years of experience, our team possesses in-depth knowledge of the mortgage programs, ensuring you receive expert guidance and the best possible rates. We offer a diverse range of loan options to suit your unique needs, including conventional, FHA, VA, and more. No matter your situation, we've got a solution. At PBJ Mortgage, we pride ourselves on providing personalized service. Our dedicated loan officers are here to guide you every step of the way, making the process as smooth as making a peanut butter and jelly sandwich. We understand that time is of the essence, which is why we've streamlined our processes for efficiency and convenience. Transparency and clear communication are paramount. You'll always know where you stand throughout your mortgage journey. Reach out to us today to set up a call to discover your options. If you're ready to make your home ownership dreams a reality, contact PBJ Mortgage today. Let us empower you during this exciting journey. Phone number 4-693-733-107 www.pbjteam.com. Visit our website or give us a call to get started. We look forward to helping you secure your future home. PBJ Mortgage, where home begins.
Thanks for your patience.
The other thing to keep in mind is going to be the servicing aspect of it. And this is really why a lot of people want to choose banks, is because they're like, well, it makes it easier for me to make the payments because I already bank with them, et cetera, et cetera. There's one major thing here that I want to point out that is really, really, really important to understand. Okay. No one, I don't care if they tell you we service all of our own loans. Oh, it's going to stay in house and we're going to keep the loan, yada, 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 whatever. Okay. Some of those things may be true, and I'll dive into that here in a minute, but you sign a form at a closing. I don't care what mortgage company you are closing with. Okay. Bank, credit union, it doesn't matter. Okay. No matter what you're signing a piece of paper that says you understand the servicing rights can be sold. Okay. What are the servicing rights and what exactly does that mean? So servicing rights is when your loan actually, like you've done the loan and you've made it and now you're going to make the payments. Who are you going to make the payments to? That is called a mortgage servicer. Okay. This person's primary function, right, in this role is to collect payment. Okay. And banks can service their own loans. That's perfectly fine. Mortgage companies can service their own loans if they want to. That's perfectly fine. And then you have completely independent third-party servicers that can service loans. Okay. Understand, even if you go with your bank, you go with a mortgage company that swore that they keep all their loans in house and the percentages and all that or whatever, it is always a possibility, regardless, always, that they could sell the servicing rights and you could end up with somebody else and you have zero control over it. You sign a piece of paper to that effect at your closing. So am I telling you that like a lot of large banks or large mortgage servicers don't hold their servicing rights? They do. And in a lot of cases, they may keep it for the whole entirety of the loan. It's very possible. Okay. So I'm not negating that. I'm not saying that doesn't happen. I'm saying don't make your decision based solely off of, oh, well, they're going to have my loan and that makes it easier for me. Usually when it comes to like shorter term kind of loans, like personal loans, car loans, stuff like that, different situation and scenario here. Typically, there is only going to be the one servicer on it. And I think that's why people think in their head, oh, well, I did the loan with these people, and so that's the people that I'm going to pay. That is not necessarily the case. Okay. So just keep that in mind when you are looking to compare the two. Some of the pros on the banking side, like I said, sometimes if they really want that loan type, then they'll move heaven and earth to be able to get it done. Okay. On the converse of that, if they don't want that kind of loan, right, they will make the decision and they will cut it off at the legs. And sometimes you can actively be in their pipeline, meaning you can have an active contract. You could be actively in the mortgage loan process and they say, yeah, we don't want to do those kind of loans anymore. So we're not gonna. And that's it. You have to now go find a different company. Okay. And so when people are wondering if banks versus mortgage companies are better, I wouldn't necessarily say that one is better than the other. I would say they're just very different. From my personal viewpoint, I tend to like companies that have a little bit more options and flexibility on interest rate. And that tends to be either like a correspondent lender or a broker or somebody that has multiple places that they can put my loan. And that's not always like with a bank, that's typically not the case. There are some that do correspondent lending. Some banks do that, but as a general rule, most of them don't. And so the rate is what the rate is. So that can be good or bad, right? That can be positive or negative. The other thing that I will tell you, because I've worked for literally all of the kind of institutions, I've worked for credit union, I've worked for banks, I've worked for correspondent lenders, I've worked for regular mortgage companies, direct lenders, I've worked for brokers. I mean, any possible way you can slice it, I have worked for them. And the one thing that I saw when I worked for several different banks is if they're in the weeds about some banking thing they need to deal with, they typically try to pull resources. And that means that they don't want to focus on mortgages. And that means that the rates tend to go up and the amount of time it takes to do a loan can slow down. And in my mind, that is a negative, right? I don't like that. I don't like that somebody is now controlling not only the interest rate because they don't really want to do loans, but also the amount of time it's taking me to get a deal done. I don't like that. I don't like it from a consumer standpoint. I don't like it from an originator standpoint. That is not my favorite thing. Hence why I don't work for a bank anymore, just to be very fully transparent. But just to kind of give that heads up, like understand that there's not anything inherently wrong about banks versus mortgage companies. You just have to understand it. You have to understand how they work, the kind of products they offer. And that's the other thing I was going to point out is that sometimes there is very weird. Remember, I talked to you about they want like niche part of the market. Sometimes there are very weird niche products that they will offer that no one else can touch. It might be for a very specific neighborhood, right? Because remember that banks fall under this provision that says that they have to lend in areas that are basically depressed due to certain economic factors. It could be low income areas, things like that. And because of that, they sometimes in these areas will offer these amazing freaking loans that no one in the industry can touch because they are trying to meet their federal criteria for continuing to be able to bank. Right. And so understand that there's sometimes products like that they offer, or there could be a group of clientele that they really just want to attract. And so they're going to create some weird specialty product that is going to be lights out way better than anything else in the industry that touches that. And so just understand that if anybody tells you that one option is the best choice, they're probably blowing smoke on that. They're probably not telling you the whole truth and the whole story. And so again, those are some of the kind of bigger factors when it comes to what's better. The only other thing that I can think of that you also want to understand and consider is if you personally have a little of what we like to call in the industry as hair. And what I mean by hair, I mean something about your profile is not perfectly perfect. That could be your credit score. That could be the way that you receive your income. Maybe your income's not very provable. Maybe that is how much cash you're holding on to. So maybe we don't have a whole lot of money to put down, things like that or whatever. A lot of times, I'm going to be very real with you. A bank is not always a great choice for you because they have a lot more strict guidelines surrounding those specific aspects than a regular mortgage company will have. So understand and know that when you're going in, because like I said, that's going to be some of the bigger factors. Regardless, I encourage you to pick an expert. Pick an expert you are comfortable with that feels like gives you good information, that helps you understand the pitfalls of your particular situation, if there are any, what you need to look out for, what you need to know. So if you're wanting to have some conversations to just help you understand where you're at, and if it makes sense, we would love to book a call with you. We would love for you to book a call, have some conversation, help you determine what might be the best for you personally, because that is going to be the biggest factor is your situation is unique and you should be met with expertise that can uniquely pinpoint your exact circumstance and situation. So hopefully this was helpful for you to kind of understand what that looks like and how it operates.